Welcome back. This is the big story here on the BDTV Breakfast Show, and this is where we discuss key issues shaping our nation, our economy, and industries at large. My name is Elizabeth Musa, and today our discussions will focus on assessing the deregulation of the oil downstream sector, its impact on consumers of petroleum products, and on the economy generally. And to understand this better, we are being joined by Mr. Jide Pratt. Mr. Jide is the COO and Country Manager at TradeGrid, an oil and gas company. He is an energy, oil and gas professional with an entrepreneurial mindset, a just energy transition enthusiast who is passionate about renewable energy and sustainability. Mr. Pratt has over 2 decades of experience in leadership and people management across West Africa. Welcome to the show, Mr. Jide.
Thank you for talking to me.
And also, I've got joining me on this conversation as well, Mr. Joshua Bassi, our editorial director here at BusinessDay. Let's go straight to the conversation. Let me start by asking you to please share a bit of background on the full deregulation of the downstream oil sector and why it was necessary for us to do so.
Okay, thank you again for talking to me. So I think we should start from the beginning. I think we all recall that sometime in May 2023, there was a famous phrase from the president: subsidy is gone.
Gone, yes.
So if we took a step back, we'd find out that as a country, we deregulated the economy in terms of products. So if you look at the fact that things like gas oil, which is diesel, and aviation fuel, which is jet fuel, this product had been deregulated a while back. But there seemed to be one product that hadn't been deregulated, and that was petrol, PMS. So when the president said subsidy was gone, he was speaking specifically to petrol. So what that meant is that pre-deregulation, it means that the prices of a product are not determined by the factors of demand and supply alone. It means that there is a certain cushion effect, palliative, discount that is applied to that product to sort of shield the general public and consumers from the full price of that product. If we look at what has happened from May 2023 till now, what we'll see is that things are, I will use the word work in progress. Because you'll notice that since that period till now, there have been price changes. And more often than not, those price changes have been north of the former price. So if we were buying at 165, we moved to 540. We were buying at 540. Right now, we're somewhere within 920, 970, as the case may be. So what it does mean is that the consumers, more often than not, at this point in time, are unhappy with the fact that the prices are higher. They're not unhappy at the fact that Nigeria had a history of fuel queues. So they're not unhappy that if they went to a retail outlet today, they would find products. So that speaks to the availability. So you notice in that same statement, we've talked about the availability.
Absolutely.
After the deregulation, there's availability. Affordability now is neither here nor there. For some people, it's a management. So if someone used to fill their tank and drive into the station and hear, fill up my tank. Now you find out people are not saying, fill up my tank. Okay, give me 30,000, give me 40,000. Because what they're trying to do is manage the effects of that deregulation. Why I say it's a work in progress is because we haven't yet gotten to what you call a final bus stop. It's something that will evolve over time. But ultimately, to get to such a point where there's full competition, there's full availability, affordability. And to marry availability and affordability, there needs to be efficiency. There needs to be competition. So in a nutshell, I would say that deregulation has started. As a nation, personally, I think we're better for it, but we haven't gotten to the final destination.
We haven't gotten to the final destination, absolutely. But what would you, how would you appraise the current deregulation of in Nigeria's downstream sector? So far, so good.
I mean, so far, I would say we're taking some positive steps in the right direction. What do I think we're not yet there on is, and I would like to speak about something called the price reveal. If I wanted to buy foodstuff, you would find out that I could go to several markets to find out what the prices are. These prices are not hidden. I want to buy rice, I want to buy beans. I just do a price survey. So that's on the general. If I come to oil and gas, if I wanted to buy petroleum product, they're depot prices. Depot prices are published daily. So you now find out what is company A selling at, what is company B selling at, what is company C selling at. Now, why do you do that? Because for you to offer prices to a consumer, you're going to do what is called the price build-up. So if we go back to deregulation now, it means that there should be somewhere where, as individuals, as consumers, we can go and find out what the general guide in terms of the prices. So there must be a methodology, and most importantly, there must be where to go to get that information. And that's a regulatory concern. It's not a commercial concern. If I have 50 companies, and 50 companies say, and let me backtrack, if you wanted to do a tender or an RFQ, reference request for quote, the company that gives you the tender to put in would ask you, what are the parameters around which you're giving us this price? Why are they doing that? To be sure that they're not overtly charged.
Yes.
So that they get a good return, so that they get value from that service. So back to the petroleum sector. There is a regulator who regulates downstream and midstream, and there's one for upstream. So what it means is that they're trying to find a fair balance to say that if Mr. John and Miss Jane come together and form a company and bring in $10 million, what should be a fair return on their investment? Okay, if they bring in $10 million and people are going to buy their product, then there must be a fair balance between them returning their investment and the prices people who are the consumers are willing to pay or able to pay. That conundrum, or shall I say that balance, has to come from a regulator. So these are things that we haven't gotten right yet at the moment. Data is something we still haven't gotten right. You can't just by a click of a button find out on a platform from a regulator what has been sold in the last 60 days. This used to be in the past. So in the past, when we were an economy that wasn't deregulated in terms of downstream, you had things like a PPPRA template, which was a guiding price, which was a price revelation or a price reveal. You had things like what you call truck out. Okay. So the truck out tells you the number of products that have moved from depot A to depot B, the number of trucks, and then it has what you always call national reserve or stock availability. How much products do we have? How many days will they last? Those things are data that we must continue to have. They're still missing at this point in time. So I think that would be an assessment of where we are and where we need to get to.
I'm sure Mr. Joshua will probably want to take this.
Yeah, fine. Yeah, but I think about deregulation, I think for us consumers, I think I'm looking at this from the perspective of the consumer. Yeah, it's good for us because, like you said, competition is kicking in. Maybe it has not gotten to, it has not gone full throttle, but it's beginning. We are beginning to see. 2 Sundays ago, I was driving to church and I saw a filling station where the queue was just very long, and I've been looking for that filling station to find because of what people say. Oh, they are going to fuel last longer than the others. I went in and I spent like 15 minutes before I could buy. I felt, should I stay this long? I mean, after all, we are not having fuel scarcity. But then I was, forced to stay because of there's the news that this one is last longer than the rest in your car and all that. But then very recently we also saw a post by someone who said, I bought fuel from this, I bought fuel from that, and then I put into my petrol engine, and then of course this one lasts longer. So I'm asking you, what does this mean? Because we also saw one of the operators coming to say, this is wrong, and then even issuing threats. I could understand that might have come from a point of maybe possible fear of the marketing. So I don't know, what's your take on this? And then what is the role of the regulator in a thing like this?
That's an interesting question. So let's start by saying that an individual has an experiment put out on the media that is not scientific. It's that individual's perspective from that individual's point of understanding. So let's go specific to PMS. Every time you buy petroleum products in any economy, in any country, there's what you call the specific or specification sheet. In oil, as in lubricant, you have what you call a technical data sheet. Now, when the petroleum sector is set up, it means that there must be someone to say that this is the quality of petrol you can bring in. That's the regulator. So the regulator has this. So you have companies like the NAMDPRA for Downstream. You have standard organizations of Nigeria. What they do is that they come in with a spec sheet and say, this spec sheet has a range. And I'm going to speak to two things that are very important in every specification sheet. It is density. That's number one. And for petrol, specifically, it will be 0.72, which is a range, to 0.78. Now, it means that in the quality of that product, if I get at 0.72, specific gravity or density, at 15 degrees Celsius, it's okay. But if I get it at 0.78, it's also okay because the regulator has provided a range. Yeah. But it means that the closer it is to 0.78, the heavier it is. That's what density is. So that could have an effect in terms of how fast it burns or not. Then there's something called research octane number. And most people will know it as RON. So you could hear RON 91, RON 97. In terms of that research octane number, what it means is that every time it's higher, it means that the molecules break down slower, which means that that product will last longer because it doesn't burn as fast. And the reverse is the case. If the RON is lower, then what it means is that the bonds or the molecules are not as tightly knit and it will burn faster. Now the regulator knows this. And in fact, from their specification sheet, that is why the regulator will tell you all the products we have are within range, are within specification. The role of the regulator is to make sure that every product that comes in, so every time a vessel comes into Nigerian waters, there's something called the yellow flag. To board that vessel, a yellow flag has to be raised. And the first people that will board that vessel is what you call health, port health. To be sure that you're not bringing in any contaminated product, but most importantly, you're not bringing in any disease. When that is done, the regulator is present, and then a sample is taken. So you take that sample and you take it to the lab. And what you're doing is that you're trying to show that the sample that you have taken conforms with what is on that vessel. But most importantly, conforms with what is the acceptable standard coming into Nigeria. Now, so can you imagine if I wanted to bring in product and 5 of us wanted to bring in product, which should be allowed in terms of competition? And I bring in product that is closer to a higher octane level and a higher density. And then I sell it through my outlets. And then people come and but this Ford that I bought yesterday, it seems to have lasted. They're not saying this based on any scientific understanding.
Background, yeah.
But it's a feeling. And I tell people perception is always often larger than reality. But it also means that in that statement, there's another thing that is called the integrity of the pump, or pump integrity. It means that if I took a measuring can from station A and pumped in 20 liters, if the measuring card reads 19, then what it means is that it's not really 20 liters. If I go to another station, measure it, and it gives me 20, then I can go around saying 20 for 20. Let me keep going to this place. Now, I said that to say this. We've talked about two different parameters. We've talked about the quality. We've talked about the role of the regulator, which they are playing in terms of sending out those certifications. But there's also the perception part of it. If I perceive a certain fuel is better, then by a friction, I'm going to keep going to that station to keep on buying. Because I'm comfortable with two things. The fact that I think it lasts longer, not based on any scientific argument, and because I'm comfortable with the look and feel of the station or the customer service that they give me. So you see, in this band, we've talked about the quality of the product, and there are clear parameters in terms of the quality of the product, in terms of what we should look for. And that's why the lab testings are done. You can't bring in a vessel into Nigerian water and discharge without the regulator knowing about it.
But is the regulator playing this role? And effectively?
Oh, effectively is a relative term. Personally, and when I'm speaking, I speak as myself. I do not think that we've gotten to the best efficiency levels in terms of regulation in the country. And I say that based on what I see. I think that there needs to be more dynamism, there needs to be more transparency. And then we need to have a regulator that is a point of call. So if I feel that this product is not, I should go to the regulator and give me the test samples you get. This is the results I got. So I also feel that when there are miscommunications or feelings as individuals, the place to go to find out what is real and correct should be the regulator. I don't think that that is what it is at the moment. Something as easy as a price revelation or a price reveal or a price transparency should come from the regulator. So there should be no confusion as in what is the, and I mean, if you go to the PIA, it's extremely clear. Whether I'm a refinery, whether I'm importing, I am supposed to give the basis of my pricing to the regulator. Why does the regulator need this? To be sure that I'm not taking undue advantage of the consumers, and I'm also not defying in terms of quality and pricing it at. So let's go to that. If I say that the sulfur content in this product should be 50 particles per million. I don't want to go technical because the crowd is not all. It will mean that if it is 20, I have less sulfur in it, right? That means I should price it more expensive. If it is 50, I have more sulfur in it, so I should price it accordingly because the quality is not the same as 20. This is still the space of the regulator. But you see, you have to bring in many players into this space so that player A looks at it that, okay, freight efficiency number one. If I have a vessel, and let's take an Uber. If I have an Uber that carries 5 people, and I say, guys, let's all carpool, everybody pay your amount. What you find out is that everybody is paying just 1/5, as against if I took the cab myself and I was paying. So freight efficiency comes into play. If I have a vessel that is 20,000 metric tons, co-load options, we can both decide, okay, I want 10, you want 10. We've shared that freight. You've driven a freight efficiency as against loading only 10,000 on the 20,000. But what is the aim of what I've said? It means that to the final consumer, because I've been able to drive a freight efficiency, then it means that even though competition in this case is a collaboration, we're able to offer a better price to the consumer.
Right, so there have been conversations about the amount of fuel that we get to consume locally. Sometimes we hear 44 million liters per day. Other times we hear other figures. What do you know about, can you give us some insights about the Nigeria's daily consumption? Also, how much more should we still be importing? Should we be importing? And if we should be importing, how much more should we be importing?
Interesting question, and let me start from the end. Should we be importing? Yes. Should we be buying locally and refining locally? Yes. If you want to drive efficiency, you must enable competition. So when we say subsidy is gone, it becomes an all-commerce affair. All commerce that have the capacity. So the first answer, and I need to be clear, personally, yes, we must continue to import, and yes, we must continue to buy locally. Now let's speak to the daily need. Back to what I said in terms of data, and this is where I also think that the regulator can do better. In the past, there used to be a channel where, you remember what you call PEF, Petroleum Equalization Fund?
Yes.
Yeah.
PEF was a system where every truck that carries petroleum product reimburses or claims from the fund.
Okay.
So we had metal RFID scanners that were tagged on trucks so that you know where a product is coming from and where it's going to. without any fear of contradiction, our borders are not as tight as they should be. So before subsidy was gone, or before subsidy is gone, we found out that there was an arbitrage because we were selling our product at a subsidized rate. Meanwhile, it was more expensive outside. So people were able to take advantage of that and buy it locally and then take it across the border. So in that stage, what you found out is that we had an unrealistic and a bloated figure for our daily consumption. I think it was reduced. If I had to hazard a guess towards what I think as a country we use in terms of petrol, I would say something within the neighborhood of 30 to 35 million liters a day.
Okay.
And I'm saying this based on what I knew in the past and what I think is still obtainable. And it's for two things. People are buying less fuel at a time. And we talked about people filling their cars and saying that, give me full time. Those things have reduced. But I also think that less products are going across the border. I also believe that. So what it does mean is that I think we've answered the question of whether we should import or not.
Yes,
it means that we must begin to take advantage of, if I have a local refinery here, and it's just a modular refinery, for instance. A modular refinery is less complex, it's smaller. Then it means that it should be able to feed that environment, that region where it is, that distance where it is, because I mean, it's producing quote unquote locally. But it also means that if I have a super refinery in one location, that location can probably feed some of those areas. But what happens to smaller ports, like if I wanted to go to One, Calabar, Warri, what happens in those instances? I must be able to take in vessels into those locations. Don't forget, competition should drive efficiency. So it becomes very inefficient to go and buy from a certain location, let's say in Lagos, and then take it by truck to Calabar. It means that you have added to the landed cost, but you've also increased the final selling price because of the distance. In the past, we had pipelines. As those pipelines began to get older, vandalism set into it, then we could no longer distribute efficiently or effectively by pipeline transfers. So it's a combination of the two things. Bring in players, let them compete, let them drive efficiencies. But most importantly, the customer is able to get, because you see, availability, affordability, accessibility, and adaptability. Those are the things that drive energy security. In being energy secure, do you want a single source? Single sourcing in demand and supply is not a good thing to have, because in the unlikely event of a problem, how does business continuity happen? So it means that as a market that is fully deregulated, allow entry, competent entry, maintain quality, and that quality we're talking about has to be from the regulatory point of view. But most importantly, the efficiencies that are driven must enable you go to the retail station and wait 15 minutes, because there's something you're seeing that resonates with you. But if you don't have competition, if you don't have an all competent commerce affair, then these things disappear.
So basically, competition fuels competence.
Yes, it drives competence and efficiency.
That's which is good for consumers.
Without a doubt.
At the end of the day.
Without a doubt.
But then let me also ask, 5 years to this time, we were told Nigeria, the picture was painted, for Nigeria. No, once the Dangote refinery, come on stream, it's going to be so good and all of that. We were like just waiting for this to happen. And finally it happened. But it doesn't seem to, we don't seem to be getting that Eldorado picture that was painted for us. Oh, that when this thing happens and then there will be so much relief. Nigerians are not really having that relief. Unfortunately, again, we are also seeing some difficulty, even on the part of the Dangote, to even source for crude to be able to refine for Nigerians to be able to have that. That's no benefit. I really don't know what's your take on this. Why is it that the local refineries, which we were, clamoring for, And there are now, yeah, also some modular refineries there and there, and the big one that would say. And of course, they were told that the Port Harcourt has started, then worry and all of that. But then we are not seeing that relief. We are now ramping up local capacity for production.
Yeah.
We are not getting that big relief that we were told.
So let's put this in perspective. Yeah, and I like your questions, they're very brilliant. If you look at it that you ended this statement by talking about the ramp up, so it means that two things must happen. And I'm going to start from the refinery. When the refinery came on, we all thought it was a silver bullet. Some of us who looked deeper said no. It's a step to solving a major crisis. So what was the first major crisis? 5 to 10 years before the refinery came on, the Dangote refinery, all our petroleum product was imported because there were no local refineries. So what it meant is that it solved the problem of refining without a shadow of a doubt. But it also had to ramp up. So if you notice now, the Dangote refinery is about 550,000 barrels out of its nameplate capacity of 650,000 barrels per day. So she's been ramping up. You talked about Warri, you talked about Port Harcourt. Those are older refineries. They had to do some turnaround maintenance. Now that they're running, they cannot run at 100% capacity immediately. They're going to have to ramp up. It's also important to say that when we talk about ramp up, we were in a country where at a certain time we were producing 1 million or about 1.1 million barrels of crude oil a day. This was because of oil theft, inaccurate data. We're at 1.75 today. And we're at 1.75 because they've been able to ramp up. But in that ramp up, there's a combination of two things, crude oil and what you call condensate. Now, condensate, just assume condensate is a mixture of oil, water, gas, but there's a value to it. So the Nigerian government takes it that, look, as long as we can have value from it, then that is what we're going to declare. So we've ramped up. When you ramp up, you're able to allocate, because there are a lot of modular refineries that haven't been getting crude. And they're still not getting crude. So it means that if that's the feed that makes them, because a refinery's main primary job is to crack crude oil into heavy or light distillate. It's as simple as that. What are heavy or light distillate? Things like diesel, LPFO, so that's a combination. Petroleum products, more or less. So what you find out is that while ramping up, we must be able to also allocate. So a super refinery will go in and say that, look, I'm supposed to get 600,000 barrels a day. I'm getting 200,000 barrels a day. What do I do with the gap? They will go and import that gap. But once they import that gap, they have a decision to make in terms of, do I want to sell this locally or do I also want to sell export? Because they also have to try and cover the investment. Yeah? Now, for other guys who are also importing, they're looking at the price. And there's an import parity, export parity that they need to balance. But ramp up is the key thing I need us to continue to speak about. So assuming we get to 2.4 million barrels a day, what it means that there's so much more available for the refineries in terms of allocation, but it also means that in terms of revenue to the Federation coffers, there's also much more money. So ramping up has to be what we need to look at. So Nigerians need to look at it that, okay, this is where we were last month. This is where we are now. I would say that there's an interview a lot of people need to look for. And I would implore you to also look. Mrs. Verhegen, who is the special advisor to the president on energy. I often do not listen to a lot of people in government because I think they just give us rhetoric. But her interview was brilliant because it told us where we were before. She also spoke to where we are now and also spoke to where we are going. That, in my opinion, is an interview that inspires confidence in what is being done. I'm not a government fan to be blowing their trumpet, but you see, we must acknowledge when they do something right, we should help.
We must talk about it.
So you need to look at what they've done, how we've been able to ramp up. With the Seplat deals, there's so many deals, if you remember the end of the year, last year, that became final investment decisions, they were signed. That is something that had been missing for over a decade. So with that, you now find out that confidence has come back to Nigeria. It goes without saying that the crude oil from Nigeria is what you call sweet crude. So it's always sought after. But if we ramp up production because there's an conducive environment, investor confidence has arisen, then what it means is that we're able to allocate to refineries, both local and also get revenue in terms of gains. So for the people of we as Nigerians, those are positives to look forward to. But if all this happens without clear regulation, then there might still be a problem. But it means that in terms of where we're going, we're on the right track. A lot more conversations around gas. And I think one of the things she said in that was that the country wanted to look at a stage where locally we're connecting industrial hubs with things like the AKK gas pipeline, OB1, OB3. So these are all pipelines. Let's not get too technical. But you see, what it means is that there's hope in the horizon for the oil and gas sector. And the person who benefits in a working and thriving environment in terms of oil and gas is the consumers, while the government makes revenue. So it's a process. We've also seen price changes in the last months where prices have come down. Sometimes they've come up. So it means that something is working in terms of price modulation. We need more dynamism in terms of it, because I keep on saying that if a price changes on Monday internationally, you find out there's a gap between when it affects the tank. But I think more financial modeling needs to come into it so that that price change on your next purchase, you can start selling that price differential to the customer now. Weighted average cost of capital. There are ways around it. So my stock that is coming at a lower price than the stock I'm coming. I'm going to blend those two prices together so that I begin to give relief to the customer now instead of waiting 10 days down the line. I hope that answers that question.
So before we let you go, what would you say, what would be the accountability measures that you would say should be in place for those responsible for fuel quality breaches? Also, too, what are your major expectations from the regulatory authority going forward?
And I'm saying this again, personally, I think the regulator isn't doing enough. Let me give you an example. Sometime about 2 days back, there was a publication from the regulator about banning 60,000 and above capacity trucks. The effect of this was that there have been a lot of road mishaps, accidents where tankers have spilled over, and sadly people rushed those locations to scoop fuel. That's a very dangerous practice. Lives have been lost. So when they say, okay, the solution is this, we will no longer have axle load of more than 60,000 liters allowed on the road, we should go one step further. Every time a truck is sealed at a depot, they have manhole covers. So some of those manhole covers, there's technology to have, let me say, an airlock valve, so that in case of a spillage, those airlock valves keep the product in check. But to do that, it also means that the steel around building the body has to be one that is not weak. So I said that to say this. It means that in terms of inspections, regulations, we need to enforce. We need to be a bit clearer and firmer. Because what is the cost of removing 2 or 3 trucks from a load? It's a short supply, as against 2 to 3 people losing their lives. So the regulator has to be firmer. The regulator has to engage a bit more. It shouldn't be a case of where there's a problem and then that's where we see the regulator. The regulator should be able to say, if you go to my website on so you can see prices, you can see rules and regulations. They need to get a massive. We have a young population. So while we have a young population as a country, you find out that sometimes they're impatient in terms of reading. So find ways of communicating the message in a clear, concise and succinct manner, but involve them. The more they understand, then the better for us as a country. We need to go to traditional oil and gas companies. When I say traditional, people like MEMAN, Major Energies Association. So you have those who have been in Nigeria for over 40 to 50 years. You have DAPMA. These are also people who have been in Nigeria for decades. But you also find out they're integrated in that system, from tanks to trucks to stations. So if you begin to drive compliance from their viewpoint, then it's easy to permeate across the country. The petroleum tanker drivers, Nupeng, they need to see the value in enhancing technology around safety. While you have a truck that is tracked from point A to point B, it still goes to the fact that if this truck turns over, is it able to keep the product inside without a spillage? These are things we need to begin to enforce, not tomorrow now, even for the 45,000. And it's a process because it comes with capital. So there also has to be patient capital from the country. Infrastructure capital. This is capital that is not at 37%. You get my point. It has to be, I don't want to use the word cheaper, but I'll say patient capital, because they're going to have to invest to upgrade. But in that, there also has to be probity. So you're not giving money to someone who's out of business. Is the rail an option in terms of moving petroleum products? Years back in a former employer that I worked with, decades ago, we used to move petroleum product by train. Then there were a few derailments. The question is, why were those derailments? And what do we do after that? The Nigerian railway is a bit more viable now and forward-thinking than it used to be in the past. So these are times to be having this conversation. The pipeline transfers. These are all things that the regulator has to engage. If between Lagos and Aba, there are pipeline infrastructure, but because they are broken or because of insecurity, I would also say that security agencies need to step up. They're doing much better, but also step up, so that we can begin to reduce the risk of moving products from point A to point B. It's also important to note that, and remember we talked about regional supply. If you don't have to move a truck from Lagos all the way to Calabar, all the way to Kano, because there's product in Warri, because there's product in Calabar, and you decide that I'm going to go from Warri instead. These are all things that, but the regulator can no longer sit and say, I'm going to be reactive. They must be proactive. Data, that's another thing I would say. It's time to have clear data, and then most importantly, transparency. We must be able to know where to get this information. You go into some press conferences and you hear a pressman asking a question and they say, we'll get back to you. No, those are not acceptable anymore. If you come to work as a government agent, your job number one is to put what the government is doing out there in a way that we understand. Because the bottom line is that if the industry dies, then a lot of us die.
All right. Mr. Joshua, do you have any more questions? All right. Thank you very much, Mr. Jide Pratt, for your time on the big story this morning. Very insightful contributions, and we hope to have you once again on the show.
It'll be my pleasure.
Thank you for watching. This has been the big story on the BDTV Breakfast Show. My name is Elizabeth Musa. Keep watching Business Day.